All right, what we want to talk about now is entering and paying bills. It's a fairly simple process. You can go here to enter bills, or from your home menu, you can go here to enter bills. But I want to bring it up before we talk about this, that if you're a much bigger operation, you may actually purchase product and then receive it into inventory and then at a later time get a bill and tie it to the inventory that you got. You can also, here, you can enter a bill that would actually be items that would go into inventory, like you spent $1,000 on inventory stock. You know, the only reason to use inventory in QuickBooks is when you actually have items that you are reselling, not when you're like a construction company that's reselling a little bit of this and doing a lot of labor and putting together a total bill. That does not make sense. In that case, use non-inventory parts. But when you have to keep track of inventory, like volumes and quantities of very specific things, then QuickBooks works real well. If you start getting a whole ton of small inventory parts, it's better to just write it off in full as cost of goods sold at the time that you purchase it and not worry about keeping track of the inventory in QuickBooks. You can make a one-time adjustment at the end of the year for ending inventory when you do a physical inventory count. And also, you can use QuickBooks Point of Sale for when you have a lot of inventory and you got a lot of things going on with that inventory. I would strongly suggest that, or an outside POS system, Point of Sale system, that would integrate with QuickBooks, because QuickBooks is just not made for inventory very effectively. The point of sale system is great, but inventory in and of itself is not good. So for most of the situations that I run into, we're not using it. But if you do, you would enter your purchases in as inventory items if you receive the inventory at that time. Or you would enter an expense account. So if you have, you know, if you're just simply paying a bill and it's for utilities and the bill is, you know, for $1,000, you can just simply save and close the bill. Real easy. You're just entering in the details on a form. And if you're entering in items for inventory, then you can enter and identify the inventory that you bought, which would be like that inventory part, and it would give you a quantity for what you know. If it costs more, you can change that, and you would put the the quantity on hand, or the quantity that you purchased, and that would update your invoice information, and you can save and close it. That's going to record it as a bill that is ready to be paid. So once oh, by the way, you can also go under banking and enter it as a credit card transaction. So the very same thing, if you buy things with a credit card, you can identify the credit card that you use here, and you can then pay for the bill just like you would otherwise, and it documents it just like everything else, except for it in now as being what it is, which is credit card payable. All right, so once you enter in these bills, you then can turn around and pay them. And you'll see that there's a window here that shows all the bills that have been entered. It's as easy as clicking on the bill and then going down here and saying, on this date, I'm going to write a check that's to be printed, because I'm going to soon print it, coming out of this checking account. Or if you've already written it, you can just assign the check number if you would have happened to handwrite the check. Or you can pay it with a credit card. And then you just identify the credit card that you're paying it with. So if you're going to pay the electric bill with that credit card, you'd say pay selected vendors, and it will say you're done, good to go, let's go pay more bills. So if you paid this particular customer but you paid them early, you can set a discount, like whatever, they give you a 1% discount if you pay it early. So if you put in a discount for that and put it into an appropriate account, you could either put that against the account that it went to, which in this case would be something like unto the utilities expense. So if it was gas and electric utilities, you could just decrease the amount of the expense, or you could use an account here like discounts. And then in your expenses, you're going to have total discounts, and that would kind of tell you, well, how much money did I save by paying things in advance? You may also apply it to a class if appropriate. So now the bill is going to be $10 less. If you have credits, that's because you have pre-entered that customer or that vendor for whatever reason. You have a credit outstanding with them, and you go in and you can enter the credit that you have with them. And the way that you do that is when you go to enter bill, you instead write blah blah. My mind just went blank. Right here. Enter in a credit memo. That's like if you're returning something, right? You get to put in a credit memo, and then you've got this credit. Let's just put it in for that one right there, and we'll identify that it's a credit of $50, and we'll save and close. And then at the time that we set credits for them, it will appear as a $50 credit that's available to use. We'll click on it, say done. It will put the credit in there, and then we only owe them $440. And then we can either pay with a check or a credit card. If we say it's to be printed, it will come out of the checking account. And so if we say done, if we go to our checking account to prepare a check, we're going to see one for $440 somewhere out there. And I didn't see the date on the check, so I don't know how far back it may have been. But it would be a check that's ready to be printed. All right, so that's the basic bill pay process. Let's look at preferences for bill pay first. Under the checking preferences, when you pay bills, when you write checks, you can predefine the account that it's going to come out of. Maybe you have multiple checking accounts that you use for maybe making tax deposits. You can predefine those, so I would set those up. And then for here, when you are, I would just look through these and see if you want to be like warned about duplicate check numbers that you're creating. And what account do you want to use to create different checks and do different things? All right. And then another account that we want to look at, preferences, is the accounting preferences. In accounting preferences, you might use class tracking and have sub-accounts, and so we actually already kind of covered that one a little bit. If you do purchase orders, you would want to look at that particular preference and do some specifics in there. Let me check this out. Right here. Okay, so if you use purchase orders, there's a few things here to check and make sure you're good on. If you do inventory, I would go in and go through each one of these and see if what preferences are right for you. All right.